Hi, welcome to this video day, which is on the 25th of April. It's Monday. Now, in today's video, we're going to be looking at some tips in terms of trading big trend reversals. And I'm also going to be giving my views on my favourite cross pairs to look out for the week ahead. I covered USD pairs at the weekend. I've got quite a few charts to look at. We'll go over the charts in just a moment. Now, in terms of crosses, I'm looking for the Swiss franc and Japanese yen to firm up on risk currencies, i.e. the commodity currencies. Now, I did have this view a few weeks ago. I was dead wrong. Basically, the Swiss franc, Japanese yen sold off, but they're now showing some strength, and I think we could be on the verge of major trend reversals to the upside. Also, in this video, I want to look at the very oversold British pound and a few other crosses as well. Now, what we will do is we will go over and take a look at the trade setups. But just before we do so, please do keep in mind, it is my view as of right now. It can, of course, change in line with the market action and conditions. If you want to learn all our trading techniques and also check out our daily technical sentiment analysis, 14 FX pairs, all you need to do is go to the link beneath this video and you get live access to our member center. You can also follow our Facebook page and join our Facebook group of traders if you wish. Now, in terms of pairs, the first pairs I want to look at include the JPY. So let's go and take a look at the trade setups. Before I go and look at individual pairs, just want to go through the background very quickly of why the yen has had such a big move to the downside and why we think it could have a really big counter trend rally. Now, this is the reason for the fall in the yen. It's how the market sees interest rate changes in a year's time. You can see the Bank of Japan is the most dovish. You can hardly see the bar for the JPY. The market is seeing no change in interest rates, okay? But look at the euro and the rest of the currencies here. Hawkish central banks, they all want to raise rates. So the logic of the yen short trade was basically sell the yen and buy a higher yielding currency. Now, do I think Bank of Japan are going to change their policy? Probably not. But I think downside is limited from here, just simply because there's so many investors, traders short of the yen. This chart here was from a week ago. It's titled by my traffic. Asset managers, they're big money on the COT net traders positions. Their bearish bets hit a record. You can see it down here on the right. So you've got a lot of traders short of the yen. A lot of coming at kind of the end of the move with tight stops. So you're seeing some stops get hit and the yen is firming, but there could be a lot more stops to be hit, okay? Also, in terms of capping yen downside, here's a list of dates when the Bank of Japan intervened in the market. And you can see it's sort of late 120s into the mid 130s. So there is that threat of intervention as well, which will prevent new selling of the yen. But for the yen to get a really big move to the upside going, we need to look at the S&P. Sorry, let me just bring up the chart. S&P 500. I mentioned it in the video when I did my USD pairs, but yeah, what we've seen is a decline in the yen. We had a rally, now a decline. It's all fairly gentle action, okay? Now, if the S&P really starts to sell off hard, the yen will firm. A lot of people think yen has lost its safe haven status. No, I don't think so. Historically, when the S&P sells off hard, then the yen will firm. It's got a huge current account surplus. Japan, also Japanese overseas investments are the biggest of any country. That money flows back to Japan and boosts the yen. Now, in terms of the next chart I want to show, it's this one. I showed it at the weekend, but it shows the S&P. You can see it's quite a gentle decline. This whole rally here from 2.4 up to 4.8, that's 100% was driven by Fed stimulus money printing, okay? That is being withdrawn when the Fed meet next. They're going to be shrinking their balance sheet. So the pillar of the bull move is going. We break this level, the S&P could freefall. That would really get the yen moving to the upside, but in the short term, it's oversold, okay? So We're looking for it to firm, obviously. Let's go look at some yen pairs. First one I'm going to look at is going to be Euro JPY. The JPY now, in terms of all the commodity currencies for us, they're all going down. They got too extended to the upside. They're great rallies based upon the view. In addition to yen weakness, that commodity prices are strong, so that should keep the commodity currencies strong. Too many people bought on that. Basically, the big picture is the global economy now is slowing. That historically is bearish for all commodity currencies. You've got huge problems in China, the world's biggest commodity consumer. It's all over the media today. Global growth, not global growth, Chinese growth is slowing up fast. I mean, global growth is as well. And then you've got the additional hit of COVID lockdowns. Now the Chinese are letting their currency fall. That shows they know the domestic economy is in trouble. So I think commodity prices will ease off. But a slowing global economy, Chinese economy, bearish for the commodity currency. If we get some stock market selling, they'll get hit even harder. Right. In terms of the AUD, to come quite nicely here. Then it breaks the big 86 level. Try a short, get stopped out. Then we move to the upside. You've got big blue. Okay, we know speculators are heavily short. Then that's just a little tiny blue. We think upside momentum could be slowing. This tail here doesn't reach that tail. We can get an aggressive entry at 94.80. Okay, then we come down. Basically hold the 20-day moving average on this candle. Then we take it out. Okay, so it's around almost 300 pips as of this morning. Okay, but there's still plenty of downside. Potentially another 600. Obviously, our view has got to be correct. But what are we doing this evening? We're at 91.59. So I think it's basically a sell with a stop back behind the 20-day moving average. So where our stop is 93.40. It's not too much risk against the potential reward. And if you start selling off more, you can bring the stop down. Okay. NZD JPY. Again, we'll go for the aggressive entry. Look at this blue. It touches the 20-day moving average and really bounces strongly. Sorry, I just want to bring this chart down slightly there. Then we come up to this 87 level, a round number. We poke through it. No more buyers, but we finish blue. Poke through again. Tail can't get to tail. Will come straight in below the 87 level and goes down to 84.35. So another kind of 300 pips. So the aggressive entry, I always think it's the way to go. Obviously, we've been stopped out in these yen pairs. But the risk wasn't that much. And then you got the reward on the other side, which could potentially be big. Obviously, on this one, we're looking for, 400 pips, maybe more on the downside. We'll see if that happens, of course. But, you've got to be aiming for the bigger profits, I think. And if you do it tight at a turning point, your risk is not too much. How would you play this one? There's been no change. I say that since I updated this chart, really. I think it's a sell. Stop back behind here. So that's your risk. Was it about 4-1 the second target, or is it near enough 5-1? But anyway, it's a decent reward if obviously our targets are hit. CAD JPY. Again, you get the tail exhaustion down, find support, off to the upside. In terms of this one, we get above the 102 level, get there on this little blue here. And then this red, we get to a new daily high, and we can sell back through the round number. 101.70, down she comes again. Now, in this one, how would you play it? At the minute, I've got my stop at 102.30. This one hasn't changed too much since I updated my chart. It's just a few pips. But if we start selling off and get through this 20-day moving average, stop would come down behind today's high. We're looking for this level. I think it's a very minor level of support. Then the big 92 level. Okay. So commodity currencies for us very bearish. We've seen strength in the end. We're just now hoping that is going to continue. But I think when you're trading reversals, you see a media frenzy when a currency reaches a bullish or bearish extreme. There's no way the currency can rally back, and then it does. Bad news in the price. But always know where the speculators are and how big their positions are. For that, you can use the COT Net Traders positions, which we make reference to all the time, which is a free tool. Right, let's go and have a look at some other crosses. I'm going to look at a couple of GBP crosses and a couple of CHF crosses. We're on GBP CAD. Now, I'm bullish of the GBP on all the commodity currencies, but we've already moved up a bit in terms of GBP, AUD and NZD. GBP is under pressure still against the CAD. Okay, now in terms of here, we break the 20-day moving average, down we come, don't touch it, then we bottom out a bit, come up, we only get a close above the 20-day moving average there, which we took as a long. Okay, but we just failed to hold it and come down. Okay, so we got stopped out of that trade. Now we've run on to the downside, but we're now coming in to a weekly support level. Now, in terms of COT Net Traders positions, you can see big spec selling of sterling, and they're heavily bullish of the CAD. So we know speculators are really, really short. Weekly support 162. Can it hold? We'll wait and see. If we can get through here, which is that body, those two bodies over there, we'll go long. I know the 20-day moving average is there, but I want to be early. And if we stalled into the 20-day moving average, I'll just take the trade out. So I'm going with a very aggressive entry, looking for 166 and 168 to correct the pound's oversold condition. And I think the bearish fundamentals for the pound are in the price. The war in Ukraine is going to hit the UK economy. I don't think it's going to be that bad. Okay, then you've got consumer confidence, retail sales have been low, below forecast. A lot of people saying the Bank of England won't raise rates aggressively. I think they will. If they don't, it's in the price. Speculators are too short, looking for the stops to get hit. I think it's, obviously our view's got to come right, but really good risk reward on this trade. And in terms of what we're doing tonight, I don't think we're doing too much. That's the pair I want to look at next. GBP ZAR, GBP CAD. No more sellers down at the round number. We'll come back a bit, but we still need a bit more strength to get triggered above the 163 level. Now, in terms of the next pair, GBP ZAR. We looked at the ZAR in last week's general video, that the ZAR has been the strongest of currency of all, just generally. Okay, and speculators again, massive long position in the ZAR. We were looking for the USD to rally. The USD rallied sharply, and sterling has done pretty well as well. This is a very volatile pair. So we come up strongly, then we kind of eased back a bit. There's been no change really since I updated this chart earlier. So if you wanted to play this one, how would you do it? I'd wait for some strength above these two candles here. You can always buy a dip back to support, but these two candle bodies, clear of that body there, then see if she runs. You get risk off. The pound will do better than the commodity currencies and the ZAR. So this one's going quite nicely. I'm hoping that get some joy out of GBP CAD because I've had none out of it. Okay, right. Let's finish up with two CHF pairs. They're going to be AUD CHF and CAD CHF. So we're on CAD CHF. Now, in terms of CHF, it is kind of like a slower moving yen. It is a safe haven currency with a low yield on it. Our view is obviously we're turning a little bit more risk averse, and again, speculators are heavily short the Swissy, so we're looking for the Swiss to fight back a bit on the commodity currencies. Now, in terms of the CAD, base out here, go up. It is a fairly choppy move. Then we come back to support, and then we push off again. Now, in terms of when we came up here, we're poking at the 76 level. We want to see if that level holds. We're always looking for round numbers. That's where the order flow is always around. Not always, but most of the time. So we poke the 76 level. Then the next day we go through it, and then we think actually the move we think hopefully will fail. We'll come in at, you can see it, 75.70. We then follow through the next day, and this morning we were following through to the downside. Okay, so what has happened this one tonight? Let's go and have a look. That's the wrong pair. Let's go to this one. We've got a little bit of a bounce back. My view is if you're coming in fresh, wait for a move through 75 where we were this morning. Sorry, go back to my page. So we're just through 75 this morning. I'd wait for a move back through the level. Okay. Now, in terms of downside potential, there's plenty. The stop at the minute is behind this level here. If we start gaining traction to the downside, I'll put it about 15 pips back from the high, hoping for the spec stops to get run, a bit of risk off to come. Right, next one, AUD CHF. This is very messy. We went up here, then we came back, pushed up again. That tail went at, what is it, 71, came back. We did take a short trade, we got stopped out for nothing. And then these two bodies can't get near these two tails. So basically, we've come in at 70.30. So just took the double top on the bodies. Nice thread, nice thread. Okay, now have we got any more downside to come? Actually, let's look at what we're doing this evening. AUD CHF. We're off the low, but it's nothing dramatic. So I still think this one got plenty of downside potential. You could sell a new low, look to gravitate down. Okay, if we get to a new low, our stop is presently behind 69 at 69.60. I'd probably bring it top. Well, I would. I'd bring it tighter in at 69.20. So decent risk to reward. So yeah, in terms of our reversal trading, it is very aggressive. But I think in these markets, going for the turn is always good. In terms of your risk is low against your potential reward. You can have a few goes if you get the trade wrong, okay, which we did, and hopefully come out ahead. You can get the majority of trades wrong, as I said earlier on, still make money if you skew that risk to reward in your favor. I probably labored that point, but that's the way we like to trade. But the market's nice and volatile. USD pairs, volatility there as well. We've done much better in the USD than we have in the crosses recently. But I'm hoping the crosses now will give us some really, really good profits. We shall see. That is the video for today. Thank you very much for watching it. Take care. Have a good day.